Let's take a look at problem 11-22, which is a problem that deals with foreign currency transactions. Okay, I'll read the problem right here. Globe Shipping, a U.S. company, is an importer and exporter. The following are some transactions with foreign companies. Okay, so the first one is, and I'll just try to move this out of the way, Globe sold blue jeans to a South Korean importer on January 15th for $7,400. When the exchange rate was KRW1 was equal to 0.185. Okay, so we'll assume that KRW1 is the foreign currency, the South Korean dollar. And I can't remember the name offhand, so we'll just call it the KRW1. All right, let's take a look at how we solve that. Okay, so now you can see the entry. We would record on January 15th a debit to accounts receivable and a credit to sales revenue. And then when we collect from the South Korean firm, we debit cash and we credit accounts receivable. This is very similar to some basic accounting transactions we've learned about, earlier in our accounting courses. Okay, now I've slid down so that you can read transaction 2, which says on March 8th, Globe purchased woolen goods from Ireland for 7,000 euros. The exchange rate was €1 was equal to 0.622 of a US dollar on March 8th, but the rate was 0.61 when payment was made on May 1st. So let's go see how we would record this transaction. Okay, now I've arranged the screen a little bit so that you can see the question 2 up at top and then the journal entries down below. So we're going to debit inventory and credit accounts payable for 11/6. Okay, and then we're going to revalue the foreign currency on May 1st. So we record a foreign currency transaction gain of 140 for the change in rates between the time when when payment is made, and then we go ahead and we show the settlement of the foreign currency payable. Okay, now I've added this image here that shows you where those dollar amounts come from, so you can see how we do the calculations. 11,760 converted to Irish dollars, right? Or excuse me, yes, 7,000 gets us $1.68. $1.68 times 7,000, okay, gets us 11,760. Okay, now you can watch the rest of that. If you need a little time, go ahead and pause the presentation while you can follow the logic. And we'll move on to the next part. Okay, next we come up to transaction number 3. On May 12th, Globe signed a contract to purchase toys made in Taiwan for 80,000 Taiwan dollars. The toys were to be delivered 80 days later on August 1st, and payment was due on September 9th, which was 40 days after delivery. On May 12th, Globe also entered into a 120-day undesignated forward contract to buy 80,000 Taiwan dollars at a forward rate of $1 equals 0.0376. Now, on August 1st, the forward rate for September 9th exchange is $1 equals 0.0378 US dollars. That was the Taiwanese dollar to the US dollar. Okay, and I'm just reading right here now. And then the spot rates are provided. All right, now, you begin to see the solution on the screen, but you can't see all of them. Okay, so we've got to come up with $3,008 for the first transaction with a debit to foreign currency receivables from an exchange broker and a credit to dollars payable to the exchange broker. Well, how do we come up with that $3,008? Let me show you. Okay, now I've slid the screen down so that we can see all of transaction 3. And in this area right here, you'll see where the calculations come from. So the 3,008 is the 80,000 times the 0.0376 May 12th forward rate. Okay, that gets used in our first entry. the difference between the forward rate at August 1st and May 12th is $16, and the $16 shows up as a foreign currency receivable, and we record a transaction gain on it. Then we have to record the loss on the financial statement aspect of the commitment equal to the same $16 with a debit to foreign currency transaction loss and a credit to the firm commitment. Okay, and then finally when we receipt the goods, we clear it all out by debiting inventory for 2984, crediting the accounts payable for 3000, and then eliminating the firm commitment. Okay, so those are the steps involved with number 3. Now there's still a few more steps that have to be done. It's step 3. We need to revalue the foreign currency receivable to fair value on September 9th. Okay, you see how that's done with our first entry here, right? We've got a foreign currency transaction loss. Then we have to revalue the foreign currency payable at $24. We deliver the dollars to the broker. We receive the Taiwan dollar from the exchange broker, and we finally settle the foreign currency payable. Now, if this is at all confusing, let's look at some calculations that support this. Okay, now we've looked at the $16 here already, but here's some more information that supports the various spot rates and the forward exchange rate. So if you need to think this one through, go ahead and pause it at this point. I'll let this run for about 3 seconds, then we'll go back to the image we were looking at before. Okay, so there's the entry again for the remaining entries for number 3. There certainly are a number of journal entries that get involved with foreign currency transactions. All right, next we'll look at number 4. Okay, the fourth transaction was Globe sold microcomputers to a German enterprise on June 6th for 150,000 euros. Payment was due in 90 days on September 4th. Now, they enter into a 60-day undesignated forward contract to sell 150,000 euros at a forward rate of 0.58 cents. And of course they're doing this to limit their foreign currency exposure. So here's the exchange rate of dollars to the euros, and now we see the transactions again. We record the sale, we record the entry to record the signing of the forward contract to deliver the euros, right? So we're showing the receivables and the payable. We then revalue the receivable on September 4th. We revalue the payable and record a loss. We receive the euro from the customer, deliver it to the exchange broker. Now I'm going a little bit too fast here. Let me slide this down. There's the exchange broker entry at the bottom. And then finally, we receive dollars from the broker in accordance with the exchange contract. Okay? So again, we're working through all these foreign currency transactions. If you need support for any of those numbers, you can see them here. All right? Now again, if you want to think about this, go ahead and pause the presentation. I'll give you 3 seconds to read this, and then I'll go back to the other screen. Okay, and here were those transactions again for part 4. And now I've slid it down so you can see the transaction again, so you can begin to make sense out of it if you want to pause it at this point. And at this point, we've worked through all of these transactions. Thank you.